Welcome to this channel. It's your boy Sammy. In today's video I'm going to be showing you the break and retest trading strategy. Okay, this is one of the most common pattern of trading that a lot of traders as beginner will have to experience in the first market. Okay, so I'm going to be showing you guys how to trade this particular trading strategy pattern. Okay, now first of all, the first thing we have to do is identify the market trend. Now I've heard the saying that the market is your friend. Okay, so what you want to do is identify the trend. Okay, it is with the trend that you're going to know if you're going to be trading um, with the direction of the market. Is if the market is bullish, you want to trade with the market and go bullish and look for opportunities to buy, and if the market is bearish, you want to look for opportunity to actually sell. So, and the second one is I will recommend you get to understand the higher time frame. If you guys have been following me a lot of times, you discover that I'm a kind of trader that I like to trade from the higher time frame, knowing what the market is doing. That way I'm able to stay profitable. Guys, I can tell you that for the whole of 2024 I had good outcome on my trades. Why? I trade off of the higher time frame, so it is highly um, profitable for me to identify when the market wants to reverse. So if I see some kind of movement in the lower time frame, it's easy for me to stay with the trend and understand what the higher time frame is still doing. Okay, I just execute my trade in the lower time frame. What I do is 4 hours showing me alignment in what I'm supposed to do, key levels. Then I trade off of it. I'm going to be showing you what I'm talking about, and the lower time frame execution. Okay, lower time frame for me, the execution is not to do analysis. The big mistake traders make as beginners is when they go to the lower time frame to look for setups and do the analysis in the lower time frame, you are going to be losing money. But if you stay up of the higher time frame doing analysis, you're going to be more profitable, because lower time frame is just majorly for entries, except you are a scalper, which it demands for you to have good high level of what liquidity to trade off of. Okay, so the market here in Bitcoin, this Bitcoin, I analyze the Bitcoin for today. As you can see, the market is actually bullish. Okay, so let's check something that happened here. Now this is 4 hours. Okay, this is 4 hours. Since you can see the market is bullish, I want to identify um, a major key level. Okay, a major key level. But before I do that, let me identify with the trend line to show you what happened here. I'm a big fan of trend line. Okay, these are just the two indicators that I use in the market. I like keeping my chart very clean. Okay, now since we've seen this is what I want to do. This is the last order block before the move up. As you can see, there's a bit of consolidation here before the move up. So when price is coming back to this order block, what I do is I identify something like this. If the market comes to this order block here, I'm going to be looking for entries. So what I'm doing is I'm going to be waiting for the 4 hours. All this movement here is none of my business. Let me use this to identify this. All this movement here is actually to generate liquidity, because I know the market is bullish. So what I want to do is I want to see price come back down to this order block here. When I see this, I know we can now look for opportunity to go up. It's that simple. In forex, it's not actually complex. Okay, it's very simple. So this is it. The reason why forex is complex is because of inability to wait. Okay, I know it's very crazy, like waiting for this whole thing to happen for us. It might be the end of 2 days, 3 days before it happens. But the beautiful thing about this is patience is what we pay off in the market, not our money. Okay, what we are actually exchanging the market with is patience. Normally in the outside world, when you have to work and work and work before you make money, but in forest it's actually sit down there and wait for this thing to happen. You just have to sit down. Even if your hand is moving you like this thing wants to work, just click the buy button or click the sell button. You just have to stay there and just keep waiting and be like, yes, it's going to work out. And when you finally see it happen, you execute your trade. So what I do is this for hours, so I go to 30 minutes to confirm what I just saw. Good, this is it. Now, some people will be wondering, why do I do 4 hours and 30 minutes? This is a secret, guys. Whenever the market is in a key zone. There are three key zones that I look out for. That is daily time frame. I look out for 4 hours time frame, and I look out for 30 minutes. 30 minutes is the lowest I go. Then for 5 minutes, 15 minutes, and 1 minute is for execution of my trades. Now when the market is in the 1 hour, I'm waiting for 1 hour to align. I go down to 1 hour. When the market is in daily, sorry, I go down to 1 hour. And when the market is in 4 hours, I go to 30 minutes. What I do is I go to two time frame lower. Okay, if the market is in daily, let me just align this like this. If the market is in daily, I go to 1 hour. Sorry, I go to 1 hour to identify or to confirm what I saw in the daily. Then if it is confirmed, then I go to 15 minutes for entry. Okay, 15 minutes for entry. I go to 15 minutes for entry. This is a topic for another video. I'm not going to be explaining this. If you want me to talk about the time frame alignment, it's actually giving you issues, just let me know in the comment section, okay, so I don't deviate from the topic of today. Okay, so this is what we had the breakout here, and price actually came back down here. So it's, as you can see, all of this was a consolidation phase. Okay, then we moved into an advancing stage, distribution, and then price declined here. So immediately it come down here. This 30 minutes, I cannot take this risk because it will be too high. So for 30 minutes, remember I said two time frame lower, I will go to 5 minutes to look for my entry. So 5 minutes will be the one to tell me what to risk. Yeah, this is it. So entry here, for me, I'm not comfortable with it. I must be sincere. I'm not comfortable with entering here. Now since we are doing it with the daily, I'm going to be going to 1 minute. Now remember how we have been jumping down. We started from 4 hours. We went to 30 minutes. And when we got to 5 minutes, the entry still was still too big. So I'm going down to 1 minute. I'm going back to 1 minute. That's some of the time 5 minutes gives you good entries, but some of the time it doesn't. So I will stay, okay? This is what I want. This is what I want. Now, a quick one that has kept so many guys out there. This is liquidity here. This high is liquidity. So when price dropped down here, it gave me an entry trigger here. What's the entry trigger? It's a morning star. Okay, it's a morning star, so I can actually place my entry here. Now immediately I enter here, I put my stop loss here. I'm going to be leaving this 1 minute and coming back to the original time frame, which is 4 hours. See it here. Then I'll start confirming what price is doing. So that's how you risk little on the breakout trading strategy. Okay, let me know in the comment section if you want me to talk about the time frame alignment on how to align this time frame together. Okay, thank you.